This video will work through problem 3.3 from Gapenski's Healthcare Finance 6th edition. Problem 3.3 asks us first to compare the income statement for Green Valley Nursing Home to problem 3.2's Best Care and the example 3.1 in the text. The main difference between the three, or from Green Valley and the other two, is the fact that Green Valley has 31 million in income provision for income taxes. So what this tells us, so that's the main difference. That's question A. Question B is, why do they show a provision for income taxes while the other two don't? Well, what this tells us is Green Valley is in fact a for-profit company, and so therefore has to pay income taxes on its earnings. So that's a quick way to tell whether you're dealing with a for-profit or a non-for-profit, is do they have provision for income taxes? A lot of times just indicated as income taxes. All right, then it asks us to calculate what is Green Valley's total profit margin. So let's refresh here. Total profit margin is equal to net income, NI, divided by total revenue. So in this case, net income for Green Valley is $57,881. And total revenues, we go back up to the revenue portion of the statement, and total revenues are $3,159,404. 57 divided by 3.15 million is 0.018, or 1.8%. So this is a lot less than either the Sunnyvale example, where it's 4.5%, or Best Care, where it was 4.3%. And so the question is this bad, right? We talked about in problem 3.2, total profit margin is a measure of how effective is the organization at controlling expenses, because the difference really between net income and total revenue is expenses, right? Because net income is simply total revenue minus expenses. So if you hold total revenue constant and you shrink total expenses, then net income goes up. So if we're comparing the profit margin for Green Valley against the profit margin for Best Care, which had 4.3%, we would say, well, Green Valley is not as good at controlling expenses as Best Care, and therefore it must not be as good a business. But in fact, that's a bit like comparing apples and oranges, right? Because Green Valley is a nursing home and Best Care is an HMO, and so they're going to have a different standard. So you always want to compare when you're doing financial analysis. What you want to do if you're going to compare total profit margins, you want to compare total profit margin of like businesses, because nursing homes have different, the standard for a nursing home's profit margin is going to be different than the standard for an HMO or for a clinic. Okay? And so, so you just need to keep that into consideration. Finally, the question is for 3.3D, the before tax profit margin for Green Valley is operating income divided by total revenues. Calculate Green Valley's before tax profit margin. Why might this be a better measure of expense control when comparing an investor-owned business with a not-for-profit business? All right, so our pre-tax profit margin, or before tax profit margins, we'll call it pre-tax profit margin, is going to be equal to, in this case, the operating income, which is 48 divided by the total revenue, which was 3,159,404. Divide that out, and you wind up with 0.028 or 2.8%. So the second part of the question is, why would this be more appropriate to compare in terms of expense control to a not-for-profit? Well, not-for-profits don't pay income taxes. So if you're strictly looking for a comparison to say, so if you took Green Valley and then you compared it to a not-for-profit nursing home, the not-for-profit nursing home wouldn't be paying income taxes. But it's not really up to it is up to the organization to control income taxes to a degree, but it's not really fair to compare a not-for-profit to a for-profit post-tax, right? So if you're looking at how effective is the management at managing the expenses of the organization, you'd want to ignore, for comparison purposes, you'd want to ignore the portion of the expenses that are related to income taxes. So that's why that would be useful. So a better comparison between Green Valley, a for-profit, and a not-for-profit organization would be to look at the pre-tax profit margin for Green Valley for the for-profit.